Hello, in this presentation we will record sales on account within QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. Here we are in the QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem. We're going to be entering a couple invoices here. So there's a couple ways to get to the invoices. One, we could select this drop down or this plus icon, which turns into an X. The invoices then being under the customer section. The other way to get there, and let's go there this time, is going to be in the sales section on the left side. And up top, we'll have some items here. We're going to go to the invoices item. So here is our invoices item. We can also get there from the all transactions and select the new transaction, which would be an invoice, or we can go to the invoices here and then select the new invoice to create the new invoice. So here's our invoice. We're going to type in our information. We're going to say this first invoice is going to be to Music Store Stuff, a continuing customer. We could select the drop down to find Music Store Stuff and or type this in to help populate this information and select that information. We don't currently have an email address, so we're not going to enter the email address. Remember that it is an invoice, so typically that means that we're going to be debiting or increasing the accounts receivable. That's what the invoice typically is, as opposed to a sales receipt, which would be used if receiving payment at the same point in time. And then we're going to tab through this. We do need a billing address here so that we can calculate the sales tax. Because this is an example problem, we do want to use the sales tax at just 5% just to standardize this, but we do need to get the sales tax calculated before we can make that adjustment. In order to do that, we have to have the sales tax set up within the system. Take a look at a prior presentation to do that. And then we typically will need some type of invoice here, a billing address, and the address of the company to set this stuff up. Once it's set up, then we can go in there and change it to what we're going to use 5% just to standardize this so that it can be used anywhere. And obviously sales tax can be changed by locations. Typically a pretty easy tax as long as you know what the rate is to calculate. So there's the net 30 we're going to use. We're going to use the date of 02/19/21. 02/19, that's going to be February 19th, 2021. And 30 days later is 3/21/21. I hope that's what it should be, according to the net 30 here. And then if we go down to the product, we're going to have an product item. And we're going to say it's this ENLP, this long-winded item here. And that's going to be an Epiphone Standard Pro. And if I'm misspelling that, I'm sorry about that. And we're going to go through here. We're going to take one of those. That's a type of guitar, by the way, that we are selling. We're going to have one of those. It's going to be $600. And the amount then will be 600, 1 times 600. There will be sales tax, and it's not calculating yet. You can see this down here. If it doesn't calculate, then we can't obviously change it to whatever we need it to be. And to calculate, remember we need those components that we discussed a second ago. I'm going to click down here in order to allow it to calculate, and there's the calculation. Now, once again, this is just a book problem or just a practice problem, so we want to use a standard 5% rather than what it's calculating here based on the California tax. So 600 times 0.05 is $30. So we're going to use that. We're going to use $30, and we can now change it here. And it's going to say you really want to change it. We're going to say yes because it is a practice problem. So we'll give them that information. And there is that. So let's go through here and think about what it's going to do. This is going to be an invoice. So we are going to increase the accounts receivable by 630. The other side of it will be sales. We're going to have sales, however, of only the sticker price, 600. The difference of 30 is going to go to a payable account, which will be sales tax payable. Then the other side of it's going to be the inventory is going down. It's going to be this inventory item, but not going down by 600. That's the retail price. It's going to go down by the cost, which we don't have here, which we'd have to look at the item here to see the cost. we will probably take a look at that as we look through the financials. Then the other side of it would be that the cost of goods sold, the expense related to us selling the guitar, would go up, bringing net income down. And once again, we'll see that it won't be $600, but it'll be a cost related to what we purchased this guitar for. We're going to save this, and we're going to record another one. So I'm just going to close this after it's been saved, and then we're going to create a new invoice once again. We're going to have another invoice that we will be creating before we take, and then we'll take a look at the financial statements. So we will take a look at the financial statements. So our next invoice will be going to the client of Smith Guitars. I'm not sure we have Smith here yet, so we're going to type in Smith and Guitars. So this may be a new client. Let me spell it correctly here. Actually, it's not a new client if I were to spell it correctly. So Smith Guitars, we have them there. That's going to be a continuing client in our records, and so you want to make sure that you're spelling it correctly so you don't add new clients that are unnecessarily added. And we're going to tab through this. We don't have a mailing address. We don't have an email address. And I'm going to use the same mailing address. Again, this is the only reason we're using the mailing address here is to calculate the sales tax. I know this mailing address will calculate this sales tax, and so that's what we will use. We will, if you want, of course, to set up this properly, we would want to make sure that we have the correct address we're at, the correct billing address we're using to calculate the sales tax, and that we have this tax set up in the location needed to. Then QuickBooks will automate it. The online version just automates it there. We don't need to manually input the rate at this time. QuickBooks will set that up. So once that is set up, it's great because it'll do that for you. So then we're going to say, I'm just going to hit the plus arrow. Note that I only need to bring the date up one day. And to do that, we could just say plus, and that brings it up one day. And then 30 days later is when it's due according to the terms. Then we're going to scroll down and we have the product or item number. And if we select the drop down, we see the products that we have. This is going to be a Wildcat. So Wildcat is here. It's another type of guitar. It's an Epiphone semi-hollow wood, at least according to this problem. And we're going to get one of those for $400. Once again, the sales tax not calculating yet. We can't just manually put it in there unless it does give us some calculation for us to do that with. If we select some other line, then it should do that calculation. There it is. There's the calculation that we can now change. If we pull out the trusty calculator, we're going to say 400 times 5% or 0.05. We're going to use $20 as our sales tax. So we'll just change this to $20. It's going to say, hey, that's not what we calculated. We're going to say that's okay. That's what we want to use. Why? Because it's a practice problem. And the reason we are using this is because we wanted to just give it a nice, easy, or not exactly round, but just a flat rate of 5. And then we can apply the concept of sales tax to any sales tax or use tax that we are applying to. So then we have that. There's the 420 for our second invoice. Once again, what's going to happen when we record an invoice? They're deceivingly simple here because there is a lot going on in the recording of an invoice, meaning we know that the accounts receivable, because it's an invoice, meaning accounts receivable is going to go up by the full amount, 420. The other side of this will be sales, but it's only going up by the sticker price. You can imagine the price on the guitar on the sticker, 400. The difference then being the 20, that's going to be increasing a liability for sales tax payable. And then there's going to be another side in that the inventory is going down. It's going to go down by this Epiphone semi-hollow wood, hollow body that we gave away in order to generate the 400 and then the $20 sales tax for a total of 420. However, it's not going to go down by 400. That's the retail price. It's going to go down by what we bought it for. And the other side will go up on the expense side for what we bought it for. And we'll have to look and see what that is as we go, as we see this on the financial statements. The net effect on the income statement will be an increase of 400 minus whatever the cost was, which will be recorded in the cost of goods sold. Let's see those items now by saving this and closing this, and then go into some reports. We saved that. We want to save this. Let's say it didn't quite save yet. Make sure it's saved before we close it. So we've got the save item there. and closing. So we're going to go to the reports then, left side. We're going to run first the balance sheet. And of course the balance sheet is right here, so we could just be selecting the balance sheet, one of the more common reports right up top. And we're going to say that we're going to run it for the month of February, 020121 to 0221 022821. So February 1st, 2021 to February 28th, 2021, and we will run that report. So here is the report we are looking at. We had 2 invoices here, so we know that receivables are going to go up. People owe us money for the guitars we gave and not yet receiving the cash. Here is our receivable. We've got Smith Stuff Store, we got Music Stuff Store and Smith Guitars. So if we select either of those, we should see an invoice. So here's the invoice for Music Store Stuff, and it is on there for the total, including the sales tax, of $630. So they owe us, of course, the total, $630. If we go to Smith Guitars and select that item, once again, they owe us the total, $431, not the $400 sales price. If we look at the other side, we typically think of it being on the profit and loss, or the revenue side. That's the revenue. And that's going to be in the profit and loss, changing the dates to the date range we are on, 020121 to 022821, the month of February, February 2nd, 2021 to February 28th, 2021 is what we are working in on at this time. We're going to run that report. The other side then will be in sales of product income. So here's the item. Note, if you're looking to a comparison problem and we run this report for the whole month, the whole year to date, which would be January through February, it'll be a little different. You'll still see the detail here, but this is just running for the 1 month as opposed to a 2-month time period. So we're going to select this 2000 there. And if we scroll down, here we go. We got our invoice 1014, 1015 to Music Store Stuff and Smith Guitars. Looking at the amounts, however, we have 600 and 400, which I believe were different. If we select the Music Store Stuff for the 600 amount, it's not picking up the bottom line number. It's not picking up the 630. It's only picking up the 600, 600 being the sticker price, as opposed to the sticker price plus sales tax, which is what is owed to us in, and therefore in, the receivable account of 630. We're going to close this back out. If we select the other item, we got the 400. Selecting that 400, we have our invoice once again. Scrolling down, it's for 400, however, not 431, which would be the 400 plus the sales tax. And I am going to change this sales tax right now. It shouldn't be 31. We're going to do 400 times 0.05, which is 20. So I'm going to change that now. I don't know why we didn't change that before. So it's 20. Maybe it didn't save. I'm going to click off it. It's going to say, do you want to save that? I'm going to say yes. And this is one thing you can do, is go back into these items and change the some of it, and you want to be careful doing that because it can change things, especially if it's in a date in a prior period, like a prior month or year. But we're going to save that. There's the 420. It's going to save that item. And then we're going to close that back out. So that's this side. And then we're going to look at the difference, which was that sales tax. That's back on the balance sheet. So we'll go back to the reports up here. We'll go back to the balance sheet, first report, balance sheet. We're going to run that. And we're going to say the date is 020121 to 022821 and run that report. So here is the report. We're going to scroll down to the liabilities section this time because we're looking for that California State Board of Equalization. It could just say sales tax payable. That's what it is. But this is who we owe it to. So this is kind of like what you would think would belong in the subsidiary ledger, telling us who we owe rather than what it is, which is sales tax payable. So it's a liability that we owe to the state for the sales we made, and they made us collect 5% on it so that we can then give it to them as part of the process. So if we select that item and we scroll down, there we have Smith Guitars. Here's the amount. If we add those 3 up, it will add up to the amount of the 20 in this case. If we close that back out and we look at the one above it, we have these 3 items. which was for music store stuff, and it will add up to, that stuff will add up to $30, the sales tax. All right, now you would think we were done there, but we're not quite done because I'm going to go back to the report. We also have the inventories going down. We gave away a guitar. We had a guitar. It was recorded not as like furniture and fixtures, something that was in inventory. And that inventory is now going down because we gave it away. So if we select the inventory item and scroll down, we have the invoice 1014, 1015, music store stuff, and Smith guitars. And the amounts are for 480 and 320. If we select this 480, we will see an invoice without 480 on it. So this is, QuickBooks is saying, hey, this is the form that made the 480. And we go to it and there's no 480 on it. Why? Because it's really being generated from this item here. However, this is the retail price, and we're not going to put the sales or the cost on the invoice. So it's really generated from here, but we can't see the cost. If we want to see the cost or where the cost is coming from, we can close this back out. And what is this? This is that long ENLP. And we can go to the sales on the left. We can go to products and services. And we can scroll down with this is this big long one here. So it's the 600, I believe, was our sales price, and 480 then is the cost. So when we put this in place, when we made the item, the inventory item, that's when we put the cost there. This inventory item is being used to create the invoice. However, the invoice only shows the sales price. QuickBooks knows the cost and uses the invoice to make the journal entry related to the cost, but doesn't show it, of course, on the invoice. Back to the reports, back to the balance sheet, changing the dates back to the month of February, 02/01/21, 02/28/21, and running that report. All right, so that's going to be the one inventory item. And of course, the same is true if we go, I'm clicked back on inventory, so we're back on the inventory detail. The same is true for this 320, the Smith guitar invoice. So this is the invoice we made. Inventory is going down by 320. When we select the 320, however, we don't see 320 here. We do see 400, the retail price for this guitar. QuickBooks knows what the other price is, which is 320, the cost to us, but it's not going to be on the invoice. So we're going to close this back out. We're going to look at the last location where we'll have this information. That's the cost of goods sold on the profit and loss. Back to the profit and loss, back to the reports, and then the profit and loss. And changing the dates to 02/01/21 to 02/28/21, February 1st, 2021 to February 28th, 2021, and run that report. We then see in the cost of goods sold section, so sales is increasing by the sales price, and then cost of goods sold is increasing by the cost, and the difference is what net income is increasing by. So we're going to select the 1,600. Scrolling down, we've got 1014, 1015, and there's the 480 and the 320 once again, music store stuff, and Smith guitars once again. And if we select either of those items, we will then again see an invoice without that number on it, because the number is really part of this number, but using cost, not sales price. So if we close this back out, and we go back to our report, what's happening on the profit and loss? What's the net impact on the net income? It's going up by the sales price. In the case of the Smith guitars, $400, and it's going down by the increase in cost of goods sold, which I believe for Smith guitars was 320, was it? Or, well, I'm not quite 320 or something. But the difference is going to be the net increase in net income for that particular invoice.